Okay. Okay. Okay, we're gonna go over SPY here in a second. I'm gonna have to clear these charts. Okay, who's in here? Leave a comment in here. Let me. Okay, we'll just start going over stuff. If you guys have any questions, you can put it in the chat. But really, it's more beneficial for me to make a video than go live, only because I need engagement to go live. So without engagement to go live, it's, like I said, more beneficial for me to just make a video. But there are like 3 people in here, so I'm just gonna do my best just to go over things and see if I can just help you guys out. So we can go over today and we can go over potential setups for tomorrow. As we all know, I mean, the whole market's trending, right? I mean, it's in an uptrend. Our EMAs are trending upwards. We had a huge retracement in the market. Everything's looking nice, right? I mean, there's trend lines across the board. Trend lines are getting broken, but the stocks are still going up. So even when you draw a trend line, they are getting broken. Like you can see here on the video, your trend line was broken and they're still going up. that just shows you that like majority of these trend lines aren't working because of how much buying there is in the market. It's continuing going up. But what could possibly be happening is a consolidation and a potential top. And that's one of the 3 stages that you want to see for a reversal, right? You want to see an uptrend or downtrend. You want to see consolidation. Then you want to see higher highs and a progression upwards, which are your 3 stages of a consolidation or reversal. So some of the things that we were looking at today, right? So every morning when I wake up, I mark prior day spread. So here's some lines on my NVIDIA. Let's see, we can remove all these. I really just, let's see. Let's start removing stuff. So let's start over. These are all my lines from today that I was looking at. Let's start removing stuff, and so we get a fresh start. So let's see. When I'm trading, I look at the prior day spread, and you might ask me, what is the prior day spread? The prior day spread is the high day and the low day, and I also look at pre-market highs and pre-market lows. Now, those aren't the only things I look at, but as a beginner trader or an advanced trader, at the end of the day, the best way to trade the market is the most simplest way, which is high a day, low a day, open, close, pre-market high, pre-market low, because you got to think that these investors aren't day traders. Like the majority of the people with all the money and that are throwing it in and pumping these markets and the market dumps and all that, these investors got a lot of money, and all they're looking at is how much the stock's worth. Every single day they type in on Google, Yahoo, Finance, and they just take a look at the stock price. Everybody with money that I know, that's what they typically do. They just type in Yahoo Finance. They're like, oh, yeah, Tesla was up 9% today. Real nice, 225. I'm looking to purchase it around this. They're just looking at the stock price 24/7. They don't care about candlesticks. So typically some of the most easiest ways to trade the market are the most simplest ways and the most effective ways, which is the high day, the low day, the open, the close, the pre-market high, the pre-market low. So those are the spots that I mark. So when you're getting ready to trade the trading day, I take a couple seconds in the morning and I mark very quickly my high day and my low day. And you can even mark the prior day pre-market high and the current day pre-market. So you can mark the prior day pre-market high and low and the current day pre-market high and low. So if you just did all this right here and we go down to a 15-minute time frame, let's just say even a 5-minute time frame. I want you to be able to see how this actually works. Okay. So obviously you can label these and you can make this 10 times more prettier. I can label each and one of these so I know what it's hitting and so forth, so on. Typically, I don't like this many lines. And today there was news, so you don't really get to see these lines come into effect. I really wish you would. Okay, so you do actually. You actually get to see these lines come into effect quite well. So you can see that rejection, bounce, came back down, and then it pushed higher. So even with some, I didn't have to do any charting. I did this in under 5 seconds. I looked at pre-market high, pre-market low, high day yesterday, low day yesterday, and so forth, so on. And I threw some lines on my chart, and I mean, I could have traded this better than any other strategy out there. I could have traded this better than any other indicator that's out there. So those are just simple things. Now, typically, I don't like this many this many lines. So there are in some cases where I will critique it, I guess you would say, to the ones that I think that are most important. So let's zoom back out and let's delete all these one more time, right? Because sometimes you can just look at it and be like, okay, I don't need that one. All right, so let's go ahead and remove. Like I said, if you guys have any questions, this live stream does so much better if you engage with me. There is a comment section that you can comment. Unless you guys are engaging with me and I can't see it. Okay, so you are, and I just can't see it. Of course, I knew that would happen. Okay, there it is. Okay, now it works. Okay, perfect. Okay, so now I can see it. Don't tell them our strat, they're finna patch it. Ryan, this ain't really a strat. This is basics. This is one of the basic things that you could ever do while trading is just look at pre-market highs, pre-market lows, high day, low day. This ain't theoretically a strat. This is just looking at progression of price. You want to see the stock progress, and in order to see it progress, all you're looking at is previous price. In order for a stock to go up, what does it have to do? Break the prior day high day, right? In order to go up, it has to go up higher than yesterday. Simple as that. So back to NVIDIA here. So for example, some of the things that I personally would have marked is yesterday's price action. So yesterday I see that there was a stall here. There was a stall of consolidation. Now, what I like to do is I like to chart the first point on which it did stall out at. I don't really like to mark, you can mark the high day, but I would like to mark here. That is a real good one. So the reason I marked this one is because this is the first point on which the consolidation starts. So everything past this point is considered false breakouts. So here's the first point of the consolidation. Everything past this point is considered false breakouts. You don't have no retest. You don't have any push higher. There's just a push higher, reject, push higher, reject. Do I got any new strategies? Nah, unfortunately I don't. Typically these are the best. What time frame am I on? I am on right here I'm on the 20-minute time frame. So this is highly important, and I also would mark the pre-market high here only because you did have a rejection. So this would have gave me a really good range to be looking at. So now once we get the actual resistance on this consolidation and we get this pre-market high, we've just created a range here. It's almost like, I don't know, think of it like a bubble. Like it can go like, it can bounce around in this range, but it's going to catch the stock almost every single time. Because what you're doing is you're not creating a one specific price point. See, that's the thing with majority of traders. They will come up with a support line or a resistance line, and if it breaks that line, oh, it's a no, you can't trade it, or, oh, it broke my line, we're going up, and then you go for the upside, and then it comes back down underneath your line. But if you're creating zones and a period of several lines, rather it being very specific, it's more of a range. See, focus more of being a range trader rather than being a very, very specific to the cent price trader. Because typically you narrow it down too much where you're either missing the trades or it doesn't hit your price by like 20 cents, right? Like you have $10.20 and the stock comes down to $10.40 and it actually ends up recovering and you didn't get an entry because you're 20 cents off your line, right? 20 cents off. Well, when you're doing a range, like a range bound trading like this, you can see that there's resistance here, but there's support here. So that gives you basically, I mean, theoretically, you could just draw a box. You're like, okay, I'm looking for price to recover anywhere in this range. If I can get a bottom entry anywhere here, and that would be perfect for me. That would be so perfect for me. I could get a bottom entry somewhere looking for price to just possibly bounce. And I'm not being very specific about it. I'm being very nonchalant. I'm just like, okay, anywhere in here, I'm just going to buy it. I mean, very simple. It looks like price is going to bounce within a range. If I can get the cheapest price is what I'm going for, then I'm good. That's how I'm going to trade it, and majority of the time it works. So I mean, for example, for the prior day, right? So let's go over a different day. I didn't really like the way that today traded. So let's go over different examples. This is very bad. I mean, price action, it was really just blew through the roof. So let's look at like this day, right? So you can see, let's go to a smaller time frame. This is on 20-minute. I want to be able to see the consolidation periods, right? I wasn't able to see the consolidation periods on the 20-minute, so I'm going to go to a smaller time frame to ensure that I can see what price is actually doing. So random question, but I'm going to start recording classes and posting them on YouTube to get. You got any advice for that? I don't, other than just make sure you teach them right. Financial trading needs the diamond play button already. Dude, I do need the diamond. All right, let's keep going over this. So basically for that range bound trading, like I mentioned, so right here, there is a point of consolidation, and so is this. This is also a point of consolidation. Now, I'm probably going to draw this one. I like this one because obviously this price is getting rejected off of this price. So all right, so you draw your line there. Why am I drawing it on this candle? Why am I not drawing my support all the way up here? See, this is what changes like the entire game, is because people typically draw support like this. They will see a line of several candles and they will put a line across all those candles because that is what looks perfect to them. And that is what looks like it should happen. But to me, it's always the first point within the consolidation or the support level. So I will be putting it on the first candle on which we consolidated. This would be my true support. This is where I would truly want the line. And you can even back that up by seeing where the price came back and retested it almost to a T. See, this is what I was mentioning earlier. If you had your line up here and you were one of those traders that were trading to a specific price, oh, if it comes up to 214.77, I'm going to get my short entry. Well, it didn't come up to 214.77, so therefore you never got a short entry, only because you probably didn't draw a range. What if you drew a line there and you drew a line here? Creates that bubble that I was talking about earlier. So now you have like a range bound. Okay, cool. Anywhere in this range, you're possibly looking for upside or downside. These are perfect range entries. So rather being a specific to the cent, to the dollar amount trader, you can be more of a range trader, right? And you can be looking at prior day spreads, and you can be looking at potential entry points. I don't really know if I'm explaining this too well, but if you guys if I'm kind of chopping this up a little bit, please let me know. Potential resistance blocks at the top of the two bodies to the bottom of the wick. You could put a box, but I don't like I actually started getting away from the boxes, only because the boxes makes it where I can't see what the price is doing. So typically I will just draw the lines. And I still don't really theoretically like this line here. I still wouldn't draw that line there. You know where I'll draw that line? I would draw that line at pre-market lows. That's where I would really draw that line. I would draw it at the bottom of this consolidation, and I would draw my next one at pre-market lows. And that would leave you with the perfect, almost perfect look at that. That's crazy. So we can even go to a 5-minute. Isn't that a wide range? Well, that's not a part of my range. What I just drew right there was not part of my range. Okay, I don't like Thinkorswim solely because it does this, by the way. Okay, so what this is, I've already looked at this chart, so I already know what this is. Okay, so this is not a part of the range. These are really just points on which you're targeting. These are still specific prices, but you're focusing on where to actually put them, right? I want you guys to really, really understand where I'm putting these lines. I'm putting these lines here for a very, very good reason. And these lines aren't typically where majority would put them, right? I mean, majority would probably put them here or put them here, like, oh, you have resistance up here, or they would even put them like here. But remember, our job as a trader is to get the best entry possible and to leave us enough room for potential moves. So yes, I could put a line up here. I could put 2 more lines right here. But if I put a line up here and if I put a line here, first of all, that gives me too many scenarios. And second of all, what if it comes to yesterday low a day? What if it comes all the way down to the low a day of the prior day, which leaves me with a losing trade, and it also leaves me with not a good entry? So you're either getting a recover up here to break the high a day, or you're going to wait for the prior day low for a bounce, right? So you have 2 trades here. Or you have 2 things you're looking at. You can see price recover here, and your target would be prior day high day break, because like I said, you're trading a spread. You want to see progression within the stock. So here's your zone. You want to see a push above the yesterday's high day. Now, not every time you're going to break the high day, but it's still your price target, right? It's your price target on what you're going for. You're going for the high day break. You don't have to break the high day, but as long as you have that price target and as long as you know where you're going, well, then you know when to start cutting your position size down. You know when to start selling some stuff. You get a trade here, your price target's high day break. You get up to high day, you get consolidation. You need to start letting some off because there's no guarantee that you're going to break it. So at least you have price targets and you have ranges on which you need to be trading. Also, like I said, this line at the very bottom, this is just security. If you're going to enter anything down here, you want to at least wait for the low a day or just some type of support at the lowest point, because that's going to give you the best entry on your calls. And if it does end up breaking the low a day, you can just go ahead and get out of it. But if you get an entry in between of all this, there's too many scenarios that could happen. I could draw a support there. I could draw a support line. I could even draw a resistance here. I could draw a support line here. And then I could draw a support line here. Well, okay, I mean, now you got a bunch of different lines on what you're hoping for. Which one is it going to go up from? Is it going to bounce here? 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 What if it bounces here and goes to here and then goes lower? Now you've given yourself 5 different solutions, which is too many solutions. You want to have only like 1 or 2 solution. It either goes up or it goes down. That's the only thing. And having this line at the very tippity bottom support, there's only one thing that can happen here. You break this bottom support, or you don't. 1 or 2. There's only 2 solutions. You break it and you get out of it, or it recovers. In this case, it recovers. What is your average position size when trading? I'm assuming when trading options. I'm assuming my average position size is $3,000, but typically I will change that based on how this market is trading. I actually typically change it quite often, only because if you haven't seen this market, it's crazy. This market's crazy. So I change my position size all the time. I shoot for $3,000 a trade, or 3,000 position size a trade, but I will change it based off my needs. If I don't think this trade is the most positive trade, I will come down significantly. When you put the line at the bottom of the doji, so it's also hitting today's lows, or the bottom of the beat, because isn't in the middle of the day, there's still liquidity at the bottom of those large wicks? Nah, I wouldn't say so. I would call this a false breakout. I would call this a false support. This is your breakdown and recovery. I mean, that's just a false breakout to me. Like I said, I draw my lines on the first candle that shows support. The first candle that showed support was here. and which is the same reason why we recovered. People were going short there, and then it recovered and went back up because a typical trader, I don't know. That's where I would have put it. That's all I know. So, okay, let's go to SPY here. Whoa. But those are, I mean, that's a good question, but I don't do too much about liquidity. I honestly could care less about liquidity. And I know you guys might come for my head for that, but it is what it is. I mean, I don't like using large words. At the end of the day, it's very simple. Don't overcomplicate it. Yes, there are liquidity grabs in the market. There are imbalances that have to be filled. There's a lot of things on which you can learn. That is not the type of trader I am. I don't trade liquidity grabs, nor do I trade imbalances. How'd I do today? I did good. I did good today. I traded one play, well, 2 plays. I made a 40% SPY play, and I lost 6% on Meta, on which I shouldn't have even took the trade, but I took it anyways. Okay. So you see this here. These were my lines from SPY today. I want you to see where I was putting, well, really I have this wrong. So that, I don't even know why I had that there. That was wrong. See where I'm putting these lines? So when you go down to even a smaller time, let's go to the 1 minute. Let's get the nitty gritty of this chart. Okay. So when you're trading, oh, I would love to just to clear all this. Let's just clear it all. Because seriously, this is important. Okay. So you're trading, right? Here's your first candle. Here's your first candle of consolidation. You can also put your first candle of support. All right. That's how I would be trading this right here. You're looking for a push above. You really wanted a retest, but there was no retest. So it continued to go up. This was a key level. Let me see. All right, you do have yesterday like high day and stuff like that, but we're going to just ignore all that. I'm going to go over how you would trade like a 1 minute chart. Obviously, you would mark the yesterday's spread, high day, low day, pre-market high, pre-market low, but I'm not even going to go over all that. I just want you to know how to trade a 1 minute chart. You still want to have your macro time frame and stuff like that, but when I'm trading a 1 minute chart and just trading the chart just plain as is, these are basically how I'm drawing my lines, right? So you get a point of consolidation, you draw the low, you draw the high, and then boom, there you go. Your best entry is at this bottom here. Now, ultimately, we did have a crazy push up. This was pretty obvious that we were just going to keep continuing going higher. I bought calls this morning, like right at the pump. So I think it was like right down here. I bought SPY calls. SPY retested yesterday's pre-market highs. This was yesterday's pre-market highs right here that you got to retest on this morning. I got an entry like right here, ran it up to this consolidation and sold it. And then it went to 100%. So isn't it hard to validate your levels on a 1 minute time frame midday? Wouldn't you say it would be safer to use past levels? Not necessarily. You can do it however you would like. Typically, nothing's safe. Nothing's safe. Everything's risk. But no, not necessarily. If you know how to trade, you can trade a 1 minute quite well. So you see this. You're looking for a push above. Now, one thing I want to point out is you had no retest. So with no retest on this, it's a little sketchy, right? It's a little sketchy. It's not too promising, and it's questionable. But that doesn't mean it can't go up, all right? there are times where you don't get a retest and you still go up. It's just all based off momentum and volume and stuff like that. But what it does mean is you're coming back down. If you don't get a retest, that does not mean you can't continue to go up. There's been plenty of times that you have a breakout towards the upside and it goes up really, really high, and then at the end of the day, it dumps. It's because you never got a retest. So, I mean, that's what it followed this as well. So even if you took this trade, you took a long here, you're running it up, you're up 40, 30%, you would be cautious on this trade because there's no retest. So potentially, sooner or later, you're looking for price to return to this level. Doesn't mean you can't trade it. Does not mean you can't go long. It just means you need to have that in the back of your head. You need to be constantly thinking that there is no retest here. Sooner or later, this could possibly come back into this zone, all right, on which it did. And then you get to a level where you're up here, right? So you get up here, and you're looking at these levels. So what happened here is, first of all, we got way overextended. You can even see some of my momentum indicators showing that momentum was starting to fail. So this right here, what I see is you had a quick wash reclaim, but it wasn't good enough. So instead of washing everybody out and pushing us higher, it actually did the opposite. So once you saw price fail support with a quick reclaim and then not a break of the high, right? You want to see a break of support, a reclaim, and a push higher. As soon as you saw a break of support, a reclaim, and failure to push higher, instead of this being a quick wash reclaim and a push higher, this is more of breaking a support and pushing up to a level of interest. See, because you got to think about when you sell off, first of all, typically it's unpredictable. So if it's unpredictable and it sells off and you didn't get into the trade because it's unpredictable, what are you looking for? You're looking for price to return back where it was so you can get in your position, right? That's called looking for areas of interest. So when you have a stock sell off, you're like, darn it, I missed it. Man, I would really love for it to come back up just a little bit so I can get back in. That's what everyone typically says, right? Oh, I'd really like it to come up just a little bit so I can get back in. This is what you call coming back up to a level of interest. We come back up to this level of interest on where it got shorted back down again, right? You had a sell-off. You're looking for a retracement and a push higher. Instead, you had another crazy sell-off. Boom, level of interest. You get in to the downside. If it recovers, I mean, at least you got a stop loss up here, right? It's still a good risk to reward ratio trade. And remember, you never had a retest on this support level. So you had price come all the way down and stop on the dime, like on the dime of this bottom support. Now, obviously, it broke it and continued lower, but it came down, no retest, and it continued going lower. Possibly because you didn't have any retest on this. Well, actually, you did. You did have a retest on that. But this was also another level. This is definitely also another level. Remember, when I mark my lines, I'm marking my lines on the first point of this consolidation. And when I mark a bottom line, I mark it on the first point as well. You can see here where it came to the low of day and it bounced. But you wouldn't have even had these lines on here. I'm just showing you some things that you could be doing. So this is a line. These are the lines that I definitely would have been having when trading it. You could have traded these tops here on this consolidation. You definitely would have put these lines up here. Why would you not have put lines here? Because there's not enough candles. It didn't really consolidate here. It kind of just consolidated for like 1 second and then it pushed higher. Remember, these are 1 minute candles. So it just 1 minute consolidation, push higher. 2 minute consolidation, push higher. You want to see more than just like 1 or 2 red candles. So even for here, right? So there's your first candle. and there's your first candle. So even here, you never saw any range of consolidation, right? So you can see that you had a wash under support, you had a recovery, and this is another example of not breaking those highs and coming back into a level of interest. Now, this one a little sketchy because of this large wick. I wouldn't even trade this area based off this large wick. I don't like that large wick. But you can see how price sold off, came back to a level of interest and sold off again, came back to a level of interest and finally broke those highs. And this is how I'd be drawing my lines. So remove these. I mean, you can even remove these and do it again on this consolidation range. Remove drawing. So here's your first candle of this little tiny consolidation. And practically on the same candle. So now you have the lows here, and you get these and you have your consolidation range here. So you can see price is pushing above these previous highs, but getting rejected every single time. Why is that? It's because you got to remember that we had these lows here as well, and you have that line perfectly across the top. It continues to hit those, right? Boom, reject, boom, reject every single time. And then you had a sell-off. So those SPX puts made me sad. Oh, yeah, man. That would have been killer. But it's okay. I mean, well, it does suck. I've been in that position before, so I already know how you feel. It does suck when you miss a trade, and especially if it goes for like 500%. I've definitely missed a trade before for like 300%, on which I was gonna get an entry. No, it's not. No, it's not okay. Okay, so I need more questions. Who's all in here still? I thrive on volatility days like today. Oh, 100%. Some people like it. I really don't like it. $108 or 1,800% last week. Yeah, you got to be able to hold it though, man. You got to be able to hold it. You know how hard it is to hold an 1,800% trade? Okay. So let's go over a plan. Jada wanted me to go over how to come up with a plan for the next day. So before we start getting bored or start trying to get off here, let's make sure we know what we're doing. I'm going to go to a 5-minute chart. Time frame typically doesn't matter. I just want to be able to see everything. Okay. So I'm going to mark a few levels here, and I'm going to point some things out. I'm going to point out that we're still in Thursday's spread. So you can see Thursday spread. The high is 414 and the low is 405. Now, I've already went over this in the Discord, so we already know that much. All right, so that's these two outer skirt lines. These two lines are my key levels, which honestly, let's just remove those because they're kind of in the way. Okay, so when I'm coming up with a trading plan for tomorrow, there's a few things I want to see here. So the first thing I want to see is where possible support was not retested at. I want to see where support was probably failed. And this gives me a range where I think we're going to go. So Yeah, you didn't have any. So on this breakout, you never had a retest. But price is already down here. This would have been your first line of support. So we're going to draw this low a day here. It's not low a day, but it is the level I believe that we should be watching. Yeah, I mean, you can even draw the low a day as well if you really wanted to. Okay, so I think this is a crucial range to see an opening at 409.05 for a potential bounce, or if we open below it, right? If we open below it with strong selling, then we're probably going down. We're probably going to break this 405 range, which is Thursday's spread, on which we've been waiting to do for the longest time. So here's this. And then you have, I would say, you obviously have high day. All right. So you got a top and bottom here. You got a top, you got a bottom. Now you're probably going to be like, oh, center, center, center. I'm going to mark a few centers here that I think is the most important. I'm going to mark this low right here was quite important. Okay, I'm going to mark this high. That high, that very first candle of all this consolidation. I'm going to mark that. This is another key level, so remove this. The 405.83. Okay. So when you're looking at this for the next day, I'm focusing right now too, sorry. All right. It's off just a little bit. What is this at? 414.59. That will do. Okay. Now I've just created ranges, right? I created a bunch of range. So you have $4.13 to, you have a $2 range here. You have a $2 range there. You have a 413, 408. You have a $5 range there. And then you have 408. You have a $3 range there. Okay. So for tomorrow, there's one or two things we can do. One or two things. We're looking at these highs and these lows. If we don't break this high or we don't break these lows, we're going to trade sideways within this range. And then possibly we need to be trading the minute chart and we have to get real down to it, or we need to trade something else. But we're obviously going to open. We're going to open at the top or the bottom. That's how this typically works. Sometimes we'll open in the middle, but we're going to open around one of my lines. We're either going to open up here at the top or we're going to open up here at the bottom, and it's going to leave us to confusion on whether or not to go up or down. And we're going to have to be trading the opening to know that. And we're going to be looking at retest and volume and direction. We're going to have to be looking in that to know where we're going to go. So if we open down here at this range, this is obviously a good range to go long at. But we've been trading in this spread for quite some time. I'm looking for a break out of it soon, very soon, up or down. So sooner or later, I'm going to start not trusting some of these levels. Even though we have a level down here, I'm going to start not trusting it. Even though we have a level up here, I'm going to start not trusting it because we've traded in a range for so long that sooner or later we're going to break towards the upside or the downside. And I'm not going to be trusting my zones as much because it needs to get out of this sideways action. But it all depends on what the candlesticks look like at open and how we're breaking this, right? If we're breaking it good with a good retest, with proper volume, good momentum, good direction, then yes, go up with it. So not only are you going to have your lines, but you still got to look at the opening candles and how the candles are reacting to your lines and what they're doing. And pre-market low and pre-market high is going to help you out a lot as well. So we don't even have those yet. So when we get those pre-market highs and those pre-market lows, those are going to help you out dramatically. So let's see. So this is how I'd create a trading plan for the next day. This is what I'm looking for SPY to be trading within. It'd be nice if we can get a break downwards, and it'd be nice if we can get a push forward. Anywhere in between, you got to trade all this price action. If you're shooting for the high day break, typically, sometimes what will happen is the stock will bounce where you think it's going to bounce, but if it doesn't have good momentum and it doesn't have strong buying, it will bounce just a little bit to bring you back into an area of interest for short. So you do have to watch out for that. So you will come back up, possible to a level of interest, and then it will finally break your levels. And it will do that to the opposite side as well. Maybe you'll open up at the high, you'll see possible sell-off, and then a push higher. Or sometimes, this is what I've seen at the high as well. I've actually seen this on both sides. Sometimes you'll see a push above, consolidation, and then just a dump. So you'll push above your level with probably no retest or anything like that. And then it won't hold, and it will just sell off majorly. And I've seen that on the bottom side too. You'll break your level, it will consolidate, you have no direction downwards, and it makes a full recovery the rest of the day. So you got to watch out for all that, which is why trading intraday and pre-market high and pre-market lows is going to help you. And this might be a little confusing, but you gotta, I mean, once you do it, you'll start getting the hang of it. You gotta see how it works. Let's see, you want me to go over something else, J-Dub? Can y'all hear that? Okay, let's just start looking at stuff. You want me to go over Shop and Baba? I got you. So, okay, so Tesla here. Well, no, you said Shop or Baba. Okay, let's look at those. Now these are different. I mean, these have low liquidity, so it's still the same though. Okay. So it's gonna be okay. So I'm just gonna point something out real quick before I even do any of this. It's gonna be very hard to chart this based off what happened today. It's gonna be very hard to chart this based off what happened today. Tesla's cool. I mean, we can look at these. We can look at these. So like, okay. So some of the spots. So for the upcoming day, I'd be looking for there. Right? So I'm going to ignore these large candles. I'm not going to really ignore them, but I'm not going to give them so much attention because I don't think they hold value to me. They're just very large candles and they were based off news. So I don't think these candles hold value to me at all. Let's see. And the bottom here. Definitely still want to keep the top in mind. I mean, you can mark it. And then your high day was where? Here. So it'd be nice to see a possible like opening around the $50 range for BABA to come down to 48, or even if we pushed up, right? I mean, if we pushed up, then you got to start looking at different things. Let me zoom out and let me explain what I'm doing here. If we pushed up, I have nothing above it, so we got to find something. So obviously you have this sell-off here. You have these sell-off, this sell-off. You typically want to draw your line on the first one that you see that's going to connect you with this current price. I see that there's a pre-market consolidation here. And I see that this is the same resistance from the prior day. But let's go ahead and hit this wick. You can even 52.65. So you can even, I mean, you can get more too, right? So I see that there's a consolidation here. Like I said, I always draw my lines to the first wick on, or the resistance on the consolidation. So I would draw it on this top wick. So yeah, so like if you're able to hold this range, if you ever be able to get a retest anywhere within here and good direction push upwards, I mean you're looking at anywhere above $51. You're looking at $52 on BABA. But if not, you're coming back down. And honestly, seeing pre-market's going to help you too. Because at least you know where we're opening around, right? Because what if this begins to like sell off overnight and then you open up down here around 48.74? Then the whole game plan is changed. I mean, you definitely have a plan, but it's just like you can't predict the upside without knowing where the pre-market's going to open up at. It could open up in the middle. So we can do Tesla. So I got Tesla charted. So let's see, maybe 10 minutes. Okay, so you see this consolidation? Look at that. All right. I mean, you theoretically you could possibly call this a retest of this. That little low there, that retest on this candle pushed up at the very last minute of the day. But you did have this consolidation, so look. Let me go to a 10-minute candle. Let me zoom out. That's too hard to look at. I don't know why the chart does that. Okay. Nope. I gotta go to the 1 minute. I'm trying to show you where I put these lines. These lines were put on the 1 minute. Okay. I don't know if I agree with that line, but I think I drew that line after seeing of how well it was working. So here's your first level consolidation, right? Obviously, you want to draw a line top and bottom. That gives you your range, right? You get a sell-off from it, you come back to it, sell off from it, come back into the range, and we push higher. Remember that, I mean, you should be looking at these highs here. You get that push above. I mean, you could even consider like this was a retest of that. And then you had a range up here around 210. So like it's all about target zones, right? It's all about target zones. So when you're looking at this, I mean, if you break here, there's only a few other places you can go to. I mean, it really is. I mean, being completely honest, if you break this low, this high, this high, this high, the only other range is this consolidation. I mean, that's really the only thing. I mean, I know it looks like there's a ton more, but it's because majority aren't focused on the right thing. I mean, like I said, oh, but there's something here. Oh, what about here? Oh, what about here? Well, okay. I mean, you can clearly see that those lines were working. Those lines were working clearly because you can see how they were working. But at the end of the day, it still went to where it was theoretically supposed to go to. Those lines were just used as a stepping stone just to even get up there. It was trying to return back to the consolidation on which it didn't retest. That's what it was trying to do. All this other stuff is just minor support and resistance on which it used just to get up there. But I would never want all those lines because then you leave yourself to which line is going to work. Which one of those lines is going to work? Well, you don't know because you got 5 of them on your chart and you have no idea which one's going to work. So what's better is trying to understand where price is going, right? Where is price trying to go? I mean, I see that there is major retest here with sell-off, or major consolidation here with a sell-off, no retest. That doesn't mean it's going to go there. But if price was going anywhere, I mean, wouldn't that be the area on which it's trying to go to? Because I don't understand why it would want to go to all this garbage. I mean, the only other spot of interest is here. So, like, maybe price is heading to an area of interest. So you think about that and you take the trade based off where you think it's going to go, but make sure you have conviction on where you think it's going. And that's going to allow you to get some of these better trades in. So also, here's another tip. Being able to predict where the price is trying to go before you even make a trade on like a micro time frame is going to help you out tremendously, because that's typically what I do before I make trades, because I want to make sure if I mess up on a 1 minute time frame, like if I mess my entry up, I still know where the price was potentially trying to go. Because if you're entering on a 1 minute time frame, you're going to get an entry, and let's just say you're down 20%. Okay, well, you can sell it or you can hold it. Like me, I would like to hold it. And people ask me, well, okay, why do you hold stuff so long? It's because I've already looked at where I think it's going. I look to see where I think it's going, and then I will go to the 1 minute and I will trade it. And if I make a mistake on the 1 minute and I get a bad entry and I'm down 20%, I might hold it because I've already looked at the overall direction and I've already looked at where price is heading. So I'm more enticed to hold that a little longer just so I can make my money back or more. And I'm not so scared to be down 20% because I've already looked to where it's going. I got a price target in my head. I see where price could return to, and I'm down 20% because I just made a bad entry on the 1 minute time frame. So I'll just sit there and I'll hold it. And then stock might come back up and go in my favor, and then boom, you make all your money back. Or just it won't. It won't go back in your favor, and then you might even lose even more. But typically, 9 times out of 10, it goes back in your favor. I would say 7 times out of 10. 7 times out of 10, it goes back in your favor. There are like 3 times that it just absolutely does not. Okay. So here's the deal with Tesla. See, Tesla's a hard one now because you got such a large spread. And guess what? Which tells me there's only 2 things that Tesla's going to do tomorrow. It's going to come crashing down, or it's going to go way higher. Because let me remind you what SPY did. When you're in a spread, right, the high a day on Tesla is 210. The low a day on Tesla is 189. Tesla's either going to trade back into its pump. It's going to trade back downwards, which is going to be trading back into this. It's going to trade back into it. Or it's going to go higher. It's going to go way higher. It's just going to keep going. It's just boom, 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 boom. And you're going to see the sucker at like 230. Those are the 2 things that can happen. And it's either going to happen quick or it's not. And if it doesn't happen quick, then most likely it's coming down. Or it's going to consolidate. Because let me compare this. Let me show you what I mean. This is what I mean. You see the spread on SPY? See the spread? This is exactly what's about to happen on Tesla. You have the spread. We consolidated at the lows and we head higher. And then we came back down. So the spread on Tesla is now extremely huge. So what we're going to do is trade sideways, come back down, or we're just going to go higher. Simple? Maybe. or it's extremely hard. One of the two. We'll see. Does that help? Does any of this help? All right, bro. I'll see you. I'm gonna get off here too. Then I'm gonna make a. I'm gonna make an actual YouTube video.